Right now, across the United States, there are over 4.2 million brand new vehicles collecting dust on dealer lots. A number so large it could fill every parking space in Manhattan 47 times over. And these aren't just sitting for a few days. Some vehicles have been unsold for more than 300 days. Each day they sit costs the dealers money, literally. A single $35,000 car racks up $47 in daily interest for the dealership. Multiply that by millions of cars, and we're looking at a mind-numbing $200+ million bleeding out of dealer bank accounts every single day. One Ford dealer in Texas told us, "I've got 247 vehicles on my lot. Floor plan interest is $11,639 every day. That's $347,000 a month, and I haven't made a profit in 8 months." But what's even more disturbing isn't the number of unsold cars. It's the types of cars that nobody wants. Not long ago, basic cars like the Honda Civic would sell within hours of arriving. Now, they sit untouched for 6 months or more. Sarah, a veteran dealer in Ohio with more than 2 decades of experience, broke it down soberly. "I've got $3.2 million in inventory that nobody wants. This isn't selling cars anymore. It's managing a financial disaster." These aren't niche luxury cars or overpriced trucks. These are the practical, affordable models that used to fly off the lot. So what's changed? Why are even the most reliable cars now collecting dust? It's because the collapse runs deeper than just inventory. It's not just your average commuter car in trouble. Even brands like BMW, Mercedes, Audi, and Lexus, companies that once had year-long wait lists, are now practically giving cars away and still can't sell them. One Mercedes dealer admitted, "I've had a $180,000 AMG sitting for 247 days. It's now cost me over $11,000 just to store it. I'm literally losing more on it than most people earn in a year." The luxury market was always the safe zone. If those models don't sell, everyone starts to panic. And that panic, it's spreading fast, because even cars that are supposed to hold value are plummeting in price. Used car values have collapsed by 23% in just 18 months. But that's just what the public sees. Behind the scenes, dealer auction prices, the real market, have cratered up to 35%. That means the same 2021 Silverado that fetched $45,000 a year ago now goes for around $29,000 wholesale. Yet many dealers are still trying to sell it for $38,000, knowing full well they'd never pay that today. And this disconnect between what a car is worth and what people owe is financially suffocating middle America. Jennifer from Arizona learned the hard way. "I tried to trade in my 2021 Tahoe. I owe $52,000 on it. The dealer offered me $34,000. That's an $18,000 difference. I feel like I've been financially mugged." And she's not alone. Millions of Americans are waking up to discover they owe more on their car than it will ever be worth again, and nothing they do will fix that. It gets even worse when you look at the lending system. Auto loan approval rates have fallen off a cliff, from 85% before the pandemic to just 62% today. But even for those who do get approved, the terms are brutal. Interest rates for good credit buyers have doubled, and for subprime borrowers, up to 24.9%. A finance manager revealed customers with 720 credit scores are being quoted 12%. 2 years ago, they would have been under 3%. Lending is frozen, period. Repossession rates have now surged 47% in just 12 months. And these aren't beat-up old junkers. We're talking 2021 and 2022 models. People are abandoning their cars because the emotional cost of staying in debt is heavier than walking away. One repo lot owner in Texas described it bluntly. "This isn't desperation, it's surrender." And that surrender is creating a tidal wave of wholesale losses, sending prices even lower and loans deeper underwater. If you think this only hurts dealers and buyers, think again. The factories are starting to shut down. GM just announced temporary closures at 6 facilities. Ford is cutting shifts at 4, and Stellantis is offering buyouts to 33,000 workers. But here's what the press releases aren't telling you.
These aren't just supply-side adjustments. They're desperate responses to a market that no longer exists. A GM plant manager admitted, "We built 2,400 trucks last month. Dealers ordered 800. The overflow lots? Packed with brand new cars, muffled under tarps, slowly rotting under the weight of zero demand." At the same time, manufacturers poured billions into EVs, and now they're sitting unsold as well. Ford lost $4.7 billion on electric vehicles last year. GM's big EV platform is already collecting dust. Tesla's slashing prices and still struggling to sell. One executive confessed, "We built lightning capacity for 150,000 units a year. We're selling maybe 40,000. Beneath all of this is a social shift no one in the car industry wants to talk about. Young Americans don't want to own cars anymore. And it's not about trends, it's about priorities. Remote work killed the commute. Subscription models made ownership feel like a trap. And for younger generations trying to pay off student loans or buy homes, a $700 monthly car payment is considered financial suicide. A financial advisor told us, "Every client under 30 ranks car ownership at the bottom of their financial priorities. It's just not part of the dream anymore." Cities are discouraging cars. Urban planning is shifting. Public transit, biking, even walking are on the rise. And the car industry built its entire model around a lifestyle that no longer exists. This isn't just a correction, it's a collapse. And insiders know it. Industry analysts now predict that 30 to 40% of American dealerships will close for good within 18 months. That's not a guess. That's already happening right now. A dealership association executive revealed, "We're seeing 15 to 20 dealer closures every single week. Franchises that survived 2008 can't survive this." Even the surviving dealers won't look the same. The days of walking onto a big lot, choosing a car and driving away, gone. Custom orders and smaller showrooms will replace inventory-focused lots. Financing will become a privilege, not an option. And you, the consumer, will pay for all of it unless you act now. If you already own a car, hold on to it unless you're forced to sell. Resist the panic. If you're thinking about buying, wait. Prices are still dropping and we haven't hit bottom yet. If you're stuck in negative equity, reevaluate everything before making your next move. The worst financial decision you can make right now is pretending things will go back to normal. And if you haven't already, start exploring alternatives, ride-sharing, remote work, bike share programs, even public transit, because the early adopters of post-car life will dominate the next decade. We're not just witnessing a crash, we're watching the car dream vanish in real time. And what replaces it may be the biggest shift in American life since the invention of the automobile itself. The collapse is here. The future is coming. Are you ready?